Record on screen. Share. Don't know how that's happened. Right, so let's go back a little bit then. So Monday last week, I'm going to jump over and I'm going to do a quick analysis on this for Anton because that's what we were discussing earlier. So Anton, why did we take this trade? So I'm going to give you a really quick version because the long version is lost forever. I'm sorry. A bearish pill pullback down here. Okay, the market is bullish. If you've watched my video from this morning, it explains why I'm so heavily bullish on the dollar. Okay, so go back and watch that for a clear understanding. So when I look at what's happening in the marketplace, I'm looking at a massive pool of liquidity. This is why this indicator is so helpful. It's a massive pool of liquidity sat above there, and it shows you that, we've got unmitigated orders that need to be taken. And the reason why these are really important is because there's no manipulation on any of these highs, and it means that this is a real clear target for us to take out ultimately. Whereas on the sell side, we've got, sell side liquidity, taking out, old lows and then rejecting. On the buy side, that hasn't been happening, which is why there's this pool of liquidity. So that is now a really, a deep area where we can be expecting price to move to. That alongside the fundamental analysis, understanding that dollar is ultimately weak at the moment, that gives me, clear indication that news move this morning was just literally a classic kind of liquidity move to take out liquidity. It took out this 15-minute low here. It tagged it into the hourly imbalance and the order block there and rejected. I took it on the MSU entry. Okay, so just a classic reversal, news reversal entry, really, really simple trading. I was a little bit late, as you can see. Had I got the really nice, lovely tight entry, we would have had a beautiful trade. But look, I was later to the trade than I wanted to be. I wasn't at the charts early enough. That's my own fault. And ultimately, it meant that I missed out on the better entry. I took out most of my profit here. When I saw this pullback, and it was quite a deep pullback, and then price came back up, I felt like we could be getting a reversal. So for me, ultimately, it was a case of, do I risk holding, which I could have done, or do I take most of my profit? So I've taken most of my profit. I am currently kind of pushing for just taking my profit out earlier these days. I've just learned the hard way so many times recently where I'll be holding for like a 2R, 3R, 4R trade, and I'll come back to break even. And actually, if I go to 1.5 or if I go to 2 as my max target and take, 80% off at 1.4 or 1.3 or whatever it may be, if I can do that more consistently, which I'm finding I can, then actually I've just got to increase my stakes and increase my risk to make the money that I want to make. So these are the sort of things that you can play around with when you become profitable. I know that over a long term I'm profitable. So playing around my risk for me is something acceptable. But if you're still trying to find that profitability, you're not willing, you're not kind of winning more than 50% of your trades or 40, 50% of your trades, then I wouldn't be playing around with risk right now. Just be keeping it pretty fixed. And that's more for later down the line. Anyway, right, let's start Euro USD again. Thanks for letting me know, Chris, before I got on to further than Tuesday.
No problem.
So let's go back to Monday last week. So Monday last week, and let me replay tool. Monday last week, and we were into Wednesday, weren't we? So looking back at Monday last week, there wasn't really any opportunity to get into any trades. I didn't actually take a trade on Euro USD until I think Wednesday. Yeah, Wednesday evening. Took a reversal trade. I think it lost ultimately. Can't remember now, but we'll have a look. Yeah, I think it did lose. So yeah, I didn't take trade on EU until Wednesday. So, there wasn't really any opportunity to get into anything on this position here. It was just a case of price was just pushing bullish. The liquidity was actually taken on the bell on Friday. So, the liquidity that was taken to fuel that move up was taken at the end of Friday. So a bit of a messy one that, and there was nothing really to get into on the Monday. I ran through a couple of trades that could have been taken on the Tuesday, but there were only risk entries. You had a risk entry sell, you had a risk entry buy. There was no confirmation entries, and we were on this section of price. And as we can see, this was really, really mucky and not really giving us anything that we can play around with too much either. So there wasn't really much on EU, and we kind of expected that, didn't we? We knew we had FOMC coming up. We knew we had some really big moves coming up. So it was just a case of just kind of watching and waiting. So FOMC came. And we had obviously a massive bullish push. Now I actually tried to, I think I tried to buy this candle, this kind of big bullish move here. I think I tried to buy this back up, expecting because the dollar news was bad that this was going to happen. But actually, in hindsight, that was a little bit foolish of me, and it was, quite an impulsive move. And I'll tell you why. This is why fundamentals are for your long-term analysis, not your short-term analysis. The news is going to do one or two things. It's going to take liquidity and then continue trading in the opposite direction, or it's going to take liquidity and it's going to continue trading in that same direction. It's going to do one of those two things. What we had on this news event is we had a very clear news reversal setup. So we had a small continuation first. So news came in at 7 o'clock. So we were watching that, weren't we? We then had up here 7:30. That's when the news ended. So that's when we then start looking for our positions. We had this really clear breakdown in structure. So any one of these cells could have actually been the better trade that you should have taken. Just hunting out that trap. Start the trap there was 2.3. Bottom of the trap was 2.5. So, really, really lovely trading. Taking a buy from here was probably a little bit. We were on the live at the time, and often can mean that I'm not concentrating fully on the trade itself and I'm seeing things that aren't there. So, it's really important to be fully focused when you're taking trades. Ultimately, that trade lost. So, we ended up losing that position and, the rest is history. From there, rest of Wednesday was pretty non-eventful. You'd be mad to have traded any of that earlier in the week. Earlier in the day as well. Let's have a look at the rest of my week. So Thursday analysis, GJ setup, DXY, GJ, 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 EU. So I took an EU. No, that's not the wrong one. EU, closed one early. EU long, EU long, EU long. What's that one then? Not sure I did an update on that one, but let's have a look. So that was on the 20th. So that was the Friday. Okay, so I think I was trading GJ. So we had obviously, some really nice movement over in Asia. Strong bullish push. So that was Thursday. Let's go and have a look at the Thursday price action and just see again what could have been traded. So again, we don't get anything in our classic kind of setup where we would like some sort of reversal. You wouldn't really want to be trading these the opposite direction just yet anyway, just because other than this news spike, imagine that news spike wasn't there, okay, and you zoom out, this market is a bullish market. You kind of have to ignore these news spikes because they don't count as structure, okay, and it's really, really important to understand is that there's an increased volume in the marketplace at this moment, so it pushes the price disproportionately in the direction, okay? But that can't really be classed as structure, okay? So it's really, really important to just take that kind of, as something you should just be paying attention to. Now, it's impossible because it doesn't really then give us a clear indication of what the next structure is because technically we're inside this structure. But I would see this bullish push here because it's taken out the average of all of these highs here. That for me indicates to me that we are, still quite heavily bullish. In terms of where you could have taken the trade, so we do get a reversal here at 2:30. So New York Open trap was here. Okay. We took out various liquidity points. So if we jump back to our replay tool, jump back here. Okay, let's catch up. We've got a 15-minute chart. Okay, so we took out the low of London, as you can see here. We then tagged into our 5 o'clock, 5 o'clock. So our daily open was here. 5 a.m. candle was there. So price came down and it tagged the daily open. Gave us a lovely little reversal. A lovely little reversal setup. Nice little reversal setup. And came back up to take the New York Open trap. I missed this. I was in a different trade at the time. Price really, really cleanly moves away from the area and then comes and takes out. Come on. Come on. takes out that New York Open level there. So really, really nice setup on the Thursday. Shame missed that one, but that's how it goes sometimes. And then coming forward to Thursday, so it wasn't really the greatest week for Euro USD. It wasn't really the greatest week at all. So coming forward to Thursday, so we're back up to kind of live pricing now. So where did I get into this trade? Let's have a look. I took a trade at 1 o'clock. It was that divergence play, wasn't it? So it was here. Yeah. Big bullish push down. And then we had structure change in terms of what we took out there. So let's just jump back, slip this bar here. This bar here. Sorry, I've got a million dogs running around. Get out. Get out. So took out the 50-minute low, expecting a bullish reversal. Zoom into the chart. What have we got down here? So we've got that imbalance, big imbalance there. Mark that one on. Okay, nice imbalance that we tagged into. We had multiple confluences as well, if you remember, with the DXY as well. DXY giving us a divergence on there. And then, that was a really simple trade. So the way I got into it, with divergence setting up, divergence. I think I took GU as well because it was all just so clean basically on the Friday. And we could clearly see that we were bullish. We came down, tagged into that imbalance. I think I took an initial position somewhere in here. I think I took something like this. And then I added into the position when I started getting this kind of bullish momentum like that. Most of my profit I had taken off by down here. I think the rest came down to break even from what I remember. But most of my profit was off there. I took about 2% on that trade, including GU. Don't think we quite got up to that high. I think we very, very nearly got there. Yeah, I think that stays untouched. And then so I closed most of my position out. I closed most of my position out up here. So it wasn't the greatest of weeks for EU, admittedly. It wasn't the greatest of weeks for EU, but the opportunities were there. And you've got to remember, weird, isn't it? That door's just opened itself. You've got to remember as well that, you don't need loads and loads of opportunities. If you've got a couple of pairs, and I would suggest in the early days, not even having a couple of pairs. For me, I've got, 2, 3, if you count GU as well, but I don't really count GU. I don't really trade on it. If you've got a couple of pairs that are, giving you your setups, ultimately, you don't need, you don't need to be trading every single day. That's a really, really important thing to understand, is that you don't need to be trading every single day. 2 or 3 decent setups a week on, taking 0.5% or 1% out per trade. You're going to be taking somewhere in the region of 1 to 3%, 1 to 4% per week. That's plenty. And you can scale that, you can grow that. If you can do 10% a month, you're passing every prop firm challenge every 30 days, and you're getting funded within 45 days. And then from there, you can scale that and get a payout every 30 days. And you just keep adding account after account after account in. It becomes easy after a while. And that's kind of where you got to get to, guys. So, 2 or 3 really good setups a week on a couple of different pairs. You're absolutely laughing. GJ has been particularly good. I don't really need to do much analysis on this because you can kind of just see it. It's just so bullish at the moment. And it's just a case of, I missed that trade earlier, but that was a lovely trade. I was umming and ahhing about that one. I was like, do I take it? I couldn't really decide whether I took it or not, but that's a beautiful little position that's hit its target now. So GJ, really, really simple. It's come down. It's in a bullish range. It's come down, tagged at equilibrium, tagged into imbalances, taken out liquidity here, tagged the EPA level, and it's just, rejection. So we had that big news move this morning, nice rejection setup, and, it came out to the daily high. So, really, really lovely position there on GBP JPY from this morning, and the rest of the week was much like that. Most of the profit I made last week, you can probably see, look, it's just also bullish. It's not even difficult when you trade like that. You just get into the marketplace, stop below the previous low, get into the marketplace, stop below the previous low, get in, stop below, get in, stop below, get in, stop below. I should have taken more advantage of the the profitability on GJ last week because it was absolutely huge. Every single day was just clean. So yeah, really, really nice one last week on GJ. And long may it continue. And let's see what happens from here. So yeah, cheers for tuning in, Chris. Thanks for jumping on. Those of you who are watching, any questions, as always, pop them in the group, pop them in the channel, and I will catch you in the next one. Cheers.
See you later.
Cheers, dude.